Would you have the courage to invest in the US stock market right now, knowing that many people think it's way too expensive? Because while some talk about a bubble, others keep pouring billions into it. So the real question isn't just whether the US stock market is expensive, but expensive compared to what in the market? My name's Chad. I'm a host at Zero Markets, and today I want to have a conversation with you, the long-term investor. Now, this topic has come back strong in recent years. The S&P 500 hitting new highs, the NASDAQ driven by tech, and giant companies worth trillions of dollars. Then comes the classic comment. It's too late now. Everything's gone up too much. Everything is stretched. But interestingly, that same argument popped up back in 2013, in 2016, in 2019, and yet those who stayed completely out missed historic moves. So are we really looking at an expensive US stock market? Are we really looking at an expensive US stock market, or are we just using the wrong yardstick? What does it mean to say that the market is expensive? Usually when someone says that, they're looking at multiples like the famous price to earnings ratio. And yes, if you look only at that number in isolation, the US market today trades above its historical average. But here's the first common mistake: comparing today's market to the past without considering the context. Another key point to think about: the market has changed. The game has changed. Today, the world's biggest companies aren't steel makers, they're not oil giants, and they're not traditional banks. They're businesses with massive margins, global cash generation, scalable models, and technological dominance. A software company doesn't grow like a 1990s industrial firm. So using the same metric in the same way can completely distort the analysis. Before I share the next point, I invite you to like this video so that YouTube knows you want more content like this. And subscribe to our channel if you want to stay on top of everything happening in the US and global financial markets. One key factor that we also need to address in this video: interest rates and liquidity. Asset prices don't exist in a vacuum. They depend on alternatives. See, when real interest rates are low, money seeks returns in risk assets, and that naturally supports higher valuations. In other words, the market may look expensive, but expensive compared to what? To bonds that yield very, very little, or to economies growing more slowly? And there's more. The mistake of generalization. Saying the US stock market is expensive is like saying the real estate market is expensive. Which market? In which region? What type of property? Within the US stock market, there are inflated sectors and there are overlooked companies. The problem isn't that the market is expensive. The problem is investing without criteria. So let's wrap this up in a practical way. Is the US stock market expensive? It depends, my friend. It depends. It's more demanding. It requires more analysis. It punishes those who buy empty stories. But it remains the market with the most innovative, the most profitable, and global companies in the world. The risk isn't investing in the US stock market. The risk is investing without understanding what you're buying. If this content helped you see behind the label of expensive US stock market, subscribe to the Zero Markets channel and stay tuned for the valuable content every single week. After all, a smart investor is one who stays informed and studies the market to be prepared for any turbulence. We'll see you in the next video.